This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq100 futures chart. Just before I start today's video, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screen. Let's start here by looking at the Nasdaq100. Nasdaq currently trading at 11,847. Yesterday we had a humongous rally just prior to the US markets opening, where we did actually go and reach 12,222. That was after a CPI reading coming at 7.1% versus 7.3% expected, which now shows that inflation is in a downtrend. So we're trading towards the downside, which is very, very positive, because it may mean that the Fed might not have to be as aggressive in its hikes, and it just basically nears that date when the Fed will eventually have to pivot, because that day is going to come. I'm not saying it's going to come within the next 3 to 6 months, but that day is eventually going to come. The Fed can't keep hiking interest rates forever and ever and ever, as we all know. So it just speeds up the process a little bit as to when that pivot date comes. So investors did cheer that, but ultimately we actually fizzled out most of the gains that occurred during yesterday's trading session, and that should be a massive warning sign to investors as we go into the FOMC meeting. If this market really wanted to continue its rally towards the upside, it would have used yesterday's inflation data as that example. If we look at what happened on the 10th of November last month, we had a very strong rally of 7% in the Nasdaq, and we closed right up at those swing highs. Yesterday that was not the case. In fact, we actually closed right near pretty much break even, and we formed this very ugly looking shooting star candle pattern. So I definitely believe that the risk is towards the downside as we go into the FOMC meeting. It comes down to this simple fact that high stock prices is inflationary, and of course the Fed is trying to combat inflation, so it's definitely not going to encourage high stock prices, even though they're not going to come out and tell you that. So the risk is definitely towards the downside as we go into the FOMC meeting, and any rally should be seen as sellable, just like I said yesterday. So well done to everyone who did sell that rally that occurred during yesterday's trading session, because you're now being good profit.